A wall of nearly $8 trillion in federal debt is set to hit in the next year. Will Washington start auctioning off office furniture and spare aircraft carriers? In recent videos, I've talked about the mess of an economy they're handing Trump with rising inflation, a GDP built on government handouts and migrant welfare, and million-job revisions from government statisticians who are suddenly deciding to come clean with new management on the way. But there's another lit fuse they're handing Trump, which is $36 trillion of federal debt, nearly a quarter of which needs to be refinanced in the next 12 months. Toss in at least $2 trillion in fresh deficits already baked in by Mr. Biden, and it's a cool $10 trillion the federal government will have to unload. For perspective, that's roughly half the money in every bank account in America, including yours. Moreover, the biggest traditional buyers of federal debt, China, Japan, and Saudi Arabia, have all been selling for years now, along with the mother of federal debt buyers, the Federal Reserve, which had been buying debt to print money into the economy, so-called quantitative easing, but it had to flip to selling treasuries when voters got pissed off about inflation and not being able to afford groceries. So $10 trillion for sale, and your biggest buyers are all selling. The problem beyond the obscene numbers involved is that Treasury Secretary Janet Yellen has been crackhead-level irresponsible in her maturity structures, meaning she's been borrowing short-term debt, 1 year, 3 year, when she should have been doing it long-term, like 20 years. Now, she did this because pumping out short-term debt is tissue fire for stocks and bonds, which is super going into an election. So Janet tried to buy an election, and now Washington's got a mountain of maturing debt to flog with nobody to buy. Now, what that means in practice is Treasury will have to offer higher interest rates to sell federal debt. This crowds out private borrowers who cannot compete with the trillion-dollar federal checkbook, so good luck getting a loan for your machine tool factory. That means fewer factories and fewer small businesses get loans. Worse, it means soaring interest costs, which are already $1.2 trillion per year, and those roll over into future deficits and future debt. The reason is, if you replace $1 trillion in debt at 2% with new debt at 5%, which is what it costs nowadays, you're looking at an extra $30 billion a year in debt service. Multiply that times the $8 billion they're selling, and it's a cool $250 billion in additional debt service, which is roughly twice all the money the federal government collects in tariffs, customs, and excise taxes, all because Janet Yellen had an election to buy. So what's next? Brought to you by Unchained.com. In the near term, incoming Treasury Secretary Bessent has promised to clean up Janet's maturity mess, which could reverse some of the stock market and bond market froth. So stocks may have a bumpy patch. But the bigger picture is that $8 trillion debt wall and the irresponsibility that built it puts the federal spending debate in perspective. Because while Congress fights DOGE to keep every stolen penny, the truth is either we fix Washington's deficits or we hit a financial crisis that fixes it for us at the cost of trillions in collateral damage. Okay, we'll be watching. See you next time.